In this video, we're going to talk about Lucid Motors. If you're considering buying Lucid Motors shares in your portfolio, then please keep watching this video until the end, because it covers many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $26.47 and closed at $23.38. The lowest point at which it fell to was $24.56, and the highest point it rose to was $26.48. Compared to the current price action, its 52-week low was $9.60, and the 52-week high has been $64.86. The current trading volume of Lucid Motors is 11.2 million shares, compared to the average volume of 17.2 million shares. The trading volume of Cciv is lower than its usual level, and this is probably because the market is still on the sideways regarding whether they should jump back in the company after the extreme volatility it had. The volume should increase in the upcoming weeks if it is confirmed that the stock is now going upward. At the moment, I believe that the stock is already on an upward trend, just that the tendency isn't very robust yet. Now, let's take a look at the enterprise value of the company, which represents how much the company's assets are worth once the debt is paid off. Lucid Motors' enterprise value is currently sitting at around $7 billion, meaning that the assets of the company are increasing and becoming more valuable. Ultimately, the underlying value of the company should be measured in the quality and the quantity of cars it'll manage to sell, so in this regard, Lucid is definitely on a good track. By the way, it's worth mentioning that the market sell-off it went through back in February didn't hurt its operations. In practice, Lucid raised billions in capital during that period of time and has a much better capacity in manufacturing and research and development, which both increase its capacity. Another outside signal to observe is the total amount of shares outstanding. Generally speaking, if the number of shares helps increasing, then it suggests that the company is selling the equity to pay its bills. If we look at the amount of common shares at Lucid Motors, it didn't change at all from last year to the present day. The reason why it is the case is because it's technically still a SPAC, and a SPAC has no incentive increasing the number of shares. Once the company has changed its name to LCID, there is a real possibility that the company will start selling more shares in the upcoming quarters in order to pay for operating expenses and the opening of new manufacturing facilities. Selling equity can have real consequences on the stock depending on the timing in which it happens. If the current market sentiment is negative, then this kind of announcement can plummet the stock. If the market sentiment is currently bullish, then it almost won't matter. The overall price action of Lucid Motors is that the stock will slowly recover from the massive sell-off it's been through. The current high is already higher than the previous peak, and I believe that the future stock performance will depend on the surrounding market sentiment more than on the company's own fundamentals. One thing is almost certain at this point, and it is that the stock will increase in the upcoming weeks. As traders, I think that we must seize the opportunity to increase our holdings and to ride this new wave. Just keep in mind that all good things may come to an end eventually, so make sure that your position isn't big enough to affect your entire portfolio. From the price action patterns, we may be able to get a glimpse of whether the stock still has enough steam to go upward. Meanwhile, the financial market's overall sentiment is still relatively reluctant at putting more money into innovative and growth stocks. We're not over the stock craze of 2020, and most investors decided to pull back massively from the entire disruptive and innovative sector, covering biotech, EVs, and anything requiring keynote presentations. Going forward, the focus of the market will get back to the financial stability, the longevity of the company, and whether the company has solid financial outlooks. In other words, the blue chips have once again taken over the startups as the go-to investments for money managers. In the current circumstances, the recommended approach is to be careful when buying the stocks. On one hand, the stock may be able to climb back on its own when the operations start to carry the stock price. On the other, the stock may simply increase because it fell too low. This means that the current market settings require us to tread the water carefully regarding buying shares. Many of them have become overpriced over the past 12 months, and we need to wait for another few weeks or month before the timing is right to increase the exposure. With that being said, it is clear that many stocks are now recovering from the sell-off earlier this year, and I believe that the current timing is good to target those that have been oversold over the past few months to make rapid gains, as long as we're careful in pacing the amount we buy. Of course, there will always be sudden events that create a lot of volatilities for individual companies, and this is why it is always recommended to hold a small position in those stocks in case if you're missing out. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.